All right, good morning, everyone. Happy CPI Wednesday. It is June 12th. The CPI report came out today, and as expected, right, a lot of people were waiting for this inflation report card realistically. So we all know the story about how inflation surged during the pandemic, right? A lot of Americans had money and nowhere to go, so they bought stuff, and manufacturers had a hard time keeping up. First, goods prices rose, and then when lockdowns eased, cost of services climbed. Right, price even rose at a faster pace in 40 years. Right, the fastest pace in 40 years, with consumer price index jumping to 9.1% year over year. Right, this was in June 2022, and the core CPI, which excludes food and energy, hit a peak of 6.3%. Um, that same August in 2022, right? Those dynamics have calmed down a lot realistically, and inflation has eased with CPI coming in at 4.0% year over year, and core CPI 5.3% year over year in May 2023. So today, everyone was all eyes on this data. Right, the expected CPI, the US CPI was expected at 3.1% year over year, and we actually got 3%. So a significant drop, right, from that 4% from the last month, as well as the expected, right, the expected this month. We also had 5% core CPI that came out. Or was it five? Let me make sure before. I think it was 4.8. Actually, I might be lying to you. Let me just make sure before I keep talking nonsense. Come on, load. It's not loading now. Okay, perfect. I'm not gonna wait for it. Realistically, I do think that the core CPI was something around the midst of 4.9%, right? Whatever it was. Um, so what I'm looking at, right, is the Federal Reserve's target of 2%, right? The core CPI is one of the metrics that they look at. The PCE data also is one of the main metrics that they're looking at. The 2% expected Fed inflation realistically, which is we're still well above that target if we count CPI as one of the main metrics to gauge that inflation. We compare to the core the Federal Reserve's target number of 2%. We're still well above it for now, but it's dropping very significantly, very quickly in a good pace, right? FOMC officials signaling a further rate hike in effort to cool that economy, and with it, right, the trajectory of prices to come down as well, right? Traders too expect the Fed to raise the policy rate another 25 bips later this month. I believe it's at the end of the month, assigning about a 93% probability to the outcome that they do hike once more this month. And that probability was about 86% maybe like a week ago. So the inflation data that came out today, again, propelled the market a lot higher here. We got a nice pump from yesterday's lows of those 40s. We're up about 60 or 70 handles right now. We're coming into that 45.10 region, that 45.14 region, a new high for the year in the S&P. And this, right, is one of those markets that a lot of people hate, right? A lot of people have been trying to short this. They've been trying to short this the whole way up, and they refuse to admit that we're in a very strong bullish scenario where we do have to be buying dips, and we have been buying dips since March. I don't realistically think that people are going to see this massive crash that they've been praying for, right? So people still call this a tech market rally. Call it what you will, but there are other factors that do have to do with this most recent upside that we've seen. So with that, markets are up. Let's take a look at some of the overall trade plans here. There's not too much else to talk about, right? There are Fed officials that are coming out later in the week in terms of news, but there's not really too much else. When we explore how there are distributions to the upside, right, and areas to the upside on the S&P 500, we're in a territory that we have not seen in over a year. So we'd have to zoom out, take a look at a wider chart here, and see where we stand in the grand scheme of things, right? Inflation has been dropping significantly. The Fed keeps raising, and no one really cares, right? It's not putting downside pressure in the market. That tells you that it's a fairly strong move, and a lot of these dips are going to get bought. That doesn't mean we can't have a 5, 6, maybe even 10% pullback in the fall months, but it's going to get swept up, eaten up. A lot of bears are going to be happy shorting this thing all the way up to 4,600 and then get like a 5% pullback to say, I told you so, before it rallies up to all-time highs into the end of the year. And that's pretty much how it's going to go. So what we're looking at here today, there's a distribution that we've escaped around those mid 90s, right? 44 mid 90s. That's going to be a key area for prices to hold out as strong support, right? That was an area that I missed by a few points this morning, actually trading with our live room. And to the upside, there is an area at 45, 14-ish. I believe another area is between 25 and 30. I'm going to have to take a better look at it. But a key area is 45.55, which is my upside target for the week. So I do like to see pullbacks sustain one of two levels, right? I would like to see pullbacks sustain the mid 90s. I would like to see pullbacks sustain the mid to low 80s. That's it. Anything else, we start gearing into that reversal territory where you start accepting distribution blocks to the downside. And yeah, so that's all I got for today. We're gonna be back on Thursday and on Friday to wrap this week up. I hope everyone. Oh, core was 4.8, so I was off by a bit. And I didn't want to lie to you guys; it wasn't 5, but I think five was expected, right? Regardless, it came out lower than expected. So we'll do this again tomorrow. We'll do this again on Friday and continuously. So let's open up that live trading with our team, see where these levels are, see what these distributions look like, so we can get a better look at this market. So thank you all. Thank you for joining me on YouTube. And I hope you all have an amazing day. Oops.